Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Ted Bragg. He's the head of U.S. Fixed Income over at Nasdaq, and we're going to talk about a new product launch on the Nasdaq Futures Exchange. Ted, thank you so much for joining me at MarketSite. So let's talk about that. Tell us about the new fixed income product that will be recently launched on NFX.
Sure, absolutely. So it's called DV01, or dollar value of a basis point futures contract, and it's a Treasury future, an interest rate future based off of the U.S. cash 10-year note that we currently have on our U.S. Treasury platform, NFI. It'll launch next Wednesday night, so for trading Thursday, and it'll launch on NFX, as you said, the Nasdaq Futures Exchange.
And tell us more about NFX.
So NFX, it's been around for a little over 3 years, and it was predominantly, or is predominantly, an exchange for Nasdaq that trades power. We have very large open interest in nat gas, in oil, and just recently we've converted over freight. And it's really the reason for this interest rate futures contract was because of some feedback from the clients where the power business has become successful is, well, what else can we do? So some of the comments back were, well, how about something in volatility, and how about something in interest rates? And from that, we've kind of created this product.
All right, and that's my next question to you. With the DV01, how is that going to help fixed income portfolio managers manage risk?
So in some of our trader talks, and as we talk about the Treasury market, I think everyone's aware that the Treasury market is growing exponentially, an extra $1 trillion in securities this year, and that's looked and forecasted to continue. So the clients are looking for additional products to hedge. Because the supply is going to be so large, what other ways can they hedge, and what alternatives do they have? This product is really what we'd call a precision risk tool. It mirrors the cash Treasury market, and because of that, you're going to have some certainty on where you are in the yield curve, what your duration is, and what your actual risk that you need to hedge, and we're trying to give that perfect type of hedge.
All right, now explain to us how the pricing works with DV01. Let's go through some of the product stats.
So the other idea about this was how simple can we keep it? So one, it was cash settlement, meaning no cheapest to deliver, no physical security, no, against some of our competitive product that's out there, there might be a security that's only 7.5 years in maturity that you're hedging, and it's called a 10-year. Well, now you've got some curve risk. It's not matched up. Well, this one we basically say is for the current U.S. Treasury 10-year note. As I left here and jumped on stage, 285 is the yield on the 10-year. Well, if you subtract 285 from 100, you get 97.15. And to go from 97.15, the dollar price of the future, to 97.16, that 1 basis point move in interest rates will be worth $854. The exact dollar value of a basis point for each basis point move on the U.S. 10-year note. If we had a 2-year note future, it would be $190. And the basis point move between where 2-year notes are trading, I think 2-year notes are yielding around 255, so the contract would trade 97.45. And that basis point increment would mirror the exact movement. So you get a perfect hedge to the Treasury market, and we can point to our Treasury market and settle the security. When it expires, we can say exactly what that yield should be and what that price should be.
All right, well, thank you very much for joining us at MarketSite. Really exciting to have the new futures.
Yeah, we're looking forward to it, and we think we've got a great model from a pricing perspective, and we also think from a margining perspective, we're going to get some very favorable accounting there as well.
All right, well, thank you very much, and thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.